Hi everyone. I would like to explain you basic concepts of the FIFO, LIFO and Average methods of calculation, the inventory. Probably this question will be in the financial accounting exam, and I will try to put it as simple as possible. So let's start with the purchases. So on the left side of the screen, we can see that we had the purchases of some phone during the March, and the first purchases, it was 5 phones, each phone costing like $50, and on the 5th of March 10s, 20s and 27th, and each time we have like different quantities and different prices for the phones. And this is because like usually most of the time prices increase, they like almost never decrease, but there can be some cases when the prices are decreasing. So in the right side we have this table, and in this table I showed these operations. So first column is the date of operation, second column is the type of operation, is it a purchase or is it a sales, and if it's a purchase, it's a purchase quantity, if it's a sales, it's a sales quantity, and the price and the total for that line, like 5 purchases per $50 price, that will make $250, and this is the total for sales. We have these numbers here, the sales total and purchases total. And here, like we have tasks. What should we do? We should be able to calculate the cost of goods sold and the value of ending inventory if we have left any, the gross profit and gross profit rate. So the words FIFO, LIFO, the first in first out, last in first out, and the average, these are the methods for the selling. What does that mean is just take a look in this chronology. It's at the 1st of March you bought phone, this was different price, this was different price, and all of them had different prices. So the question is, if I want to sell the phone, which phone should I sell? Should I sell like randomly from this or this, or should I have some sequence, like I should first sell the ones that I first bought, or I should sell the ones that I last bought? Yeah, and that makes a difference because the ones that I bought first, they are cheaper than the ones that I bought last. So since my selling prices are the same, no matter like what were my purchase prices, I have to make a decision that like I should sell the first ones or the last ones. Now I made a little change to this table so that it would be more understandable in the sense of these two methods. So let's take a look at them one by one, and here we can see that we have at the purchase 5 and 10 pieces, and at some point of time we sold 12 phones. So if we take into account the FIFO method, the cost of goods sold, so the amounts of a sales is 900. So I want to know that like how much costed the good, like how much cost good for me to buy it, and this 900 is my turnover. So I want to find my profit. That's why I need to find the cost of the goods sold. So that's why I'm starting this function. As we can see, we bought 12. We sold 12 of it. And if we take with the FIFO method, first in, first out. So we have to take 5 of it. So 5 from here for the price of 50. That will be 5 multiplied by 50, plus if we just can calculate, if we sold 12 and took 5 from here, then we have to take 7 from here in order to make 12 in total. So 7 we sold from the 52 one. So 614. And so we can say that, okay, we sold the goods for 900 and the cost of the goods that we sold were 614. Now let's take a look at the second one. Remember that this one we already sold out. From this one we sold 7 and only 3 left. And then we started buying some other phones. And here we can see that the prices are going up. And at some point of time we sold 16 of the phones. So as we can remember, we have left 3 phones from here, from the 10. So that will be 3 multiplied by the 52. Then we sold 16, so 13 left. 7 we sold from this, 53. 7 53. And 6 left, right? So 3 we took from here, the one for 52. 7 we took all of it from the 53, and we left only 6. And 6 we take from this 20, which is we bought for 55. And we write it 6 multiplied by 55. So this is the cost of goods sold. Now by the FIFO method, if we summarize them, we can find out this is the cost of goods sold by the FIFO method. We can write it here. Cost of goods sold by FIFO method is this number. Yep. And profit, like gross profit by FIFO is so in order to find out the gross profit, so easy. We have the sales amount 2,100 and we have the cost of goods sold, so difference is my profit. And to find the difference, we just like this minus this, 629, and gross profit rate by FIFO, or you may not even write that by FIFO thing. And in order to find the gross profit rate, we have to divide this gross profit by the sales, and of course remove the decimals until you have only 2, and you can write it down 0.30. And last thing we've left, the value of ending inventory. And the value of ending inventory by FIFO is calculating like this. So if you remember, we sold all of it. We sold this one, and this one also, all of it. And if you remember, we have took only 6 items from the one that we bought for 55, but 14 of them left. And as we can see, we also bought 3 items later on for $60. So we can say that we can calculate it. So as we remember, we have left 14 from the one that we bought for 55 plus 3 that we bought for 60. 950. And so the answer is 950 ending inventory by the FIFO. And we can check it, right? Like we can even write this in the exam also, like check So what does check do? We take ending inventory plus cost of goods sold. This is cost of goods sold here. This 1,471. 1,471. Just make this quick calculation. This plus this. And we can see this number. This and this. If these numbers are correct, like equal, then your check is correct. So we can write it 2,421. Yeah, this is the method for the FIFO. Let me put it centered. Now let's take a look at the LIFO method. This is also interesting method. So when we make a selling of 12 here, we have to take the last in first out. So by the chronology, last in this is this one, for the one that we bought for 52. So this selling here, 12 pieces, must be calculate the cost of goods sold. So if it's 12, of course with 10 take from this, that is for 52. So 10 multiplied by 52 plus 2 is missing, right? So we take 2 from the 5. That is for 50. So that will be 2 multiplied by 50. So this is cost of goods sold. Now, after some time, we are selling 16. So we have to look at the chronology again. For this 16, we have to take from the last in first out. If it's last in first out, so by the chronology, last in this is this 20, right? So if it's 16, it is 20. It all we can take from here, even there will be some leftover, and that will be 16 multiplied by the price of this one, 55. Yeah, and so we can do the summary. 1,500, and we can do the gross profit. So this is our sales minus this one, and we know that gross profit rate, this divided by sales. And we can calculate our ending inventory. So this is a little bit tricky. So as we remember, we took 10 from here and 2 from here. So from here we have leftover of 3, right? Let's write it equal to 3 multiplied by here, 50. This is our leftovers. From this purchase, we don't have any leftover. From this purchase, yes, we have all of it as a leftover, like 7 multiplied by 53. And from here, from 20, we have leftover of 4, because this 16 we all took from the 20, because it's a LIFO method, the last in first out. So according to, compared to this date of the selling of this 16, the last one of purchase was this 20. So we took everything from 20 and only 4 left there, and that will be 4 from the 55. And of course the last purchase, we have 3 phones multiplied by 60. We didn't touch that, and this is our inventory, ending inventory. So we had something, we purchased it, we sold it, and we have something left over, the ending inventory, and this is how we calculate it. So if we just copy paste this here, I'll just quickly remove the numbers. Yeah, and now try to write everything. So cost of goods sold by LIFO method, it's 1,500. Gross profit by LIFO, this is 600. Gross profit rate 0.29. Value of ending inventory in LIFO 921. And check cost of goods sold plus ending inventory. So ending inventory plus cost of goods sold equal to 2,421. We can check it. 921 plus this. This is equal, yes. Then your control is good. We can call it check. We can call it, control. It doesn't matter. Just like shows that you understood the concept. So you do it like perfectly. And the last one is average method. Average method is really, really easy to do. By the average method, you just take all the amount of purchase, right, and divide it all the quantity, purchase quantity. So this is amount of purchase, and this is quantity of purchase. So what do we do for all time? We have to find an average price only once and then apply it for every sellings. So if we can do it here, like average cost of goods sold. That is, of course, total purchase divided by purchase quantity, 53.8. So every time when we make a selling, so this is 12 quantity we sold. A second. Yeah, 12 quantity we sold. We have to do it this way. So 12 multiplied by this number here, the average. And we come here, we sold 16. Okay, good. Then 16 multiplied by this. Yeah, and then we do the summary. We have this number 1,506.4. You also have to write down the point. Don't delete it or don't leave it blank. Then we have this cost of goods sold for the average method, and we can calculate the profit. So as we know, profit is equals to total sales minus cost of goods sold of some method. And this is the profit, gross profit. And we can do this gross profit divided by the total sales. This makes our gross profit rate. And also ending inventory is really easy to find out. So we can see that we had a purchase of 45, right? And we had a sellings of 28. So 45 minus 28, so equals 45 minus 28 multiplied by this average. So this is ending inventory. And we can write already answers. So cost of goods sold by average method is this one, for 1,506.4. The gross profit by average is this one. Gross profit rate is this one. Value of ending inventory is this one. I just copied it from here, right? And the control. For the control, as always, we take the ending inventory plus the cost of goods sold. So as we can see, this number is equal to the purchase amount. So it means it is correct. Control, write it 914.6 plus 1,506. 506.4 is equal to our answer. Now, this is basically it, like all three calculation methods and the answers for these questions. Now, what I want to make it notice, like as you can see from here, the profit, this is the profit. We have like most profit by the FIFO method. And this is in most of the times is true. Like if there can be like an exam equation that which method gives you most profit, just like know that it's a FIFO, because usually, as we can see from here, the chronology prices are usually always go up because of inflation, and the products that the items that we buy before usually cheaper than the items we buy later. That's why if we take into account the FIFO method, the first in first out, so it means the first ones that we bought must be sold first. So the cheaper ones must be sold first, and the expensive ones must be sold later. And the LIFO is the opposite, and the average is the average. As the name says, we just take all the purchase amount divided by purchase quantity, and we find the price for one, and then we do our calculations. Yeah, thank you for watching, and good luck in exam.